Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 11th of February. Now, just coming into it was a big day, right? We had the US CPI numbers out. Nothing really came out to me. I mean, the news-wise are saying it's a little bit weaker. Obviously, the year-on-year is a little bit softer, but the numbers were pretty much on par, right, with what was expected. You know, once again, the core numbers up here just off on the year-to-year, slightly weaker than the month-to-month. So they're sort of saying, well, slightly weaker numbers, bit of a weaker dollar. But check out here, as I was saying yesterday, it's like one of these buy the rumor, sell the fact. Now, this is the way the sort of market moves. They were sort of probably expecting weak numbers. They've got them. It wasn't as probably weak as possible as some would have thought. You have a little bit of a knee, or not even a knee jerk. It's more like a little slide to the downside. The dollar looks like it's stabilized at this point. Right, this looks like the end of a bit of a run to me. I think we're going to need more data now. Right, the macros are definitely in play. Look at the equity markets. You know, up or down 0.23. Dow Jones up 0.2. So a pretty neutral day on the equity markets. The currencies not doing a hell of a lot. Okay, a bit of a discombobulation there as far as risk on, risk off profile and those sorts of things. And not a lot of movement here across the board. On the rest of the sort of safe havens. Obviously, Bitcoin's going mad with Elon Musk involved. So that's where we are. So it's a bit of a disappointing day in the sense that we didn't get any activity. But if you have a look at the charts are trading technically really well. I mentioned this yesterday, that there's a resistance level here. Nothing has changed in Europe from last week. And the euro came off because of all the weak European stuff, not just a dollar move. So the weak dollar, right, has really given the euro a bump up to levels where we should be really seriously looking to get short euro. Like Europe is in the doldrums. The economic data is crap. That's all where we are. Now, we've had the sort of reaction to sort of a weaker dollar perspective, non-farm payrolls missing the mark, CPI a fraction off. But it's like this has been a pretty big move, right? Almost 200 points in euro. And that resistance level held. Now, Aussie and Kiwi, well, Kiwi got close to that's sterling. Aussie got close to the resistance level up the top here. It now is just sort of trading sideways, waiting for its next major directional move. And the Kiwi looks like quite fatigued at these levels as well. One of the nice trades I sort of put on the virtual trading floors yesterday, check out oil, right? This is a really hardcore move that you can't deny is there. Now, it looks like it's sort of running out a bit of steam. Dollar CAD, it looks like everyone's ready to start buying dollars as oil falls. So keep an eye on that, because oil is the closest indicator we have for any major currency pair. And it's something to look at. Dollar yen now trading sideways. Dollar Swiss, and obviously the dollar index belted to the downside, bit of a clean out. And so I think we're at a level, right, where we're at a really good level where we can see some serious moves. Or the euro, if we get substantially more weaker US numbers or weaker data, we could see euro pop, take out a bunch of stops and then just come back down. Or if the US data starts to stabilize and the US political scene stabilizes, they get some stimulus programs rolling out, then we might see euro just drift back down to 120, the figure at least. Right? The dollar block, euro, sterling, Aussie, Kiwi, to me, just seem overdone, right? Really overdone. The dollar, yep, it's been another nice clean out to the downside. That just reboots everyone's pockets to have another crack at the next big move on the dollar. Is it up or down? I tell you what, I think this move is exaggerated. We need to get the confirmation from various, macro data, geopolitical news, whatever it might be. Now, and in the news itself, you're just going to get when it comes back down to the markets and the Forex markets, you get a bit of a perspective of what's happening on the dollar. Tame inflation, US yields way. Now they're starting to talk about bond markets. That's not a bad thing, because we like to see what's going on with the bond markets in particular. Canadian dollar steadies near 3-week low as oil rally extends. I mean, they're just highlighting the absolute obvious, right? But it's a nice way to sort of catch up on what's going on. Now, sterling breaks above 138, buoyed by vaccine push, right? And that's just a crazy geopolitical wrap up of why sterling's higher. I'll tell you what, sterling is in a prime position for a big trade. All we need is the vaccine thing to go pear-shaped. Sterling collapses like 10 cents. Right, it has to, because it's been going up on the vaccine. So if it doesn't work out, well, then you're going to see a big exit out of sterling, and that's a nice trade setup as well. So just keep an eye on that. Now, just having a look at coming back to the main page here, looking at keep an eye on the VIX, right, the volatility index, right. This is very important. It's to me the threshold for the volatility when it's under 20, the VIX. General normal market conditions, right? And we've been sitting just on this threshold at the moment. There's no extremes like we've seen periodically where volatility goes above sort of 30, 35, up to 40. Obviously, at the start of the pandemic, it was out of control. So volatility is out. Now, that's a good precursor to sort of work out, are we into the safe havens? Well, not really. You really want the volatility index above 30 for the safe havens to kick in. Right. And when the news services are talking about looking at bond yields, get your charts up. We've got access to all this data. So when you're looking at the 10-year, you can start to sort of trace where all the various bonds are. Now, if this thing starts to slide down this way, that's a major concern, right? Long-term yields starting to get lower than the shorter date stuff. That's when things start to go a bit pear-shaped. That's when bond markets become major news, and that's when everyone starts to panic. You'll see that in the volatility index. Then what we want to do is if the bond yields are impacting, what's the impact on the dollar? And then we can sort of piece it together which instruments we should be trading, right? If we get good US dollar direction, trading's easy. You've got to keep thinking that. Right now, do I have good dollar direction? Well, we sort of do, but it's in no man's land. We've just had the CPI numbers out and it's trading sideways just for the moment. Now, it's very easy to sort of work out what the next step to do is, because basically all you're doing is get your dollar index chart up. So let me just move a couple of things around here. You should, we've already got a resistance line here in play. And if I can just click on that. Okay, you're looking at sort of these sort of levels. Now, if I just actually get that at the top, I like to know where it is at the top. And one more. So I've got all the levels here. So basically this is the sort of next resistance levels that you would be focusing on should the dollar start rallying, right? And these are really steep, short-term resistance, nothing major, but it's all we have. Then you've got the previous support lines sort of coming in. I'll leave those there for the moment. So the dollar index, yeah, it's in the doldrums, but it's not by any stretch over. Okay, if I can just delete some of these, what you want to do is clear up your charts, make sure it's easy to see what's going on. Now, when you've got the charts like this, you can see the dollar's going down, right? We can see, okay, we've had the major US CPI numbers. Now, traditionally, a really good precursor to where the central bank policy is going to come, the Fed, right? Now, that's sort of stabilized for me. It looks like we're going to have a test of this 90-60 level, a bit of a dollar reprieve, right? And we'll see how that trades off this. Short-term direction, US dollar's down. The pressure's on the dollar. We're going to work out if this is a short-term little correction from the euro weakness last week. In the non-farm payrolls, I mean, are those numbers accurate? The CPI numbers you would think would be a little bit more accurate, a little bit softer. They're about to roll out a massive stimulus program. Start thinking about that and what the impact of that's going to be, right? Because that's the next big move in the dollar. Is it good for the dollar? Probably initially. Afterwards, we'll see what the impact it has on yields, bond yields, equity markets, and then we can piece together the rest of the trading instruments, what's going to happen there. So right now, it is disappointing when you come out of a trade day where you have a really key release and you just don't have that conclusive data. Is the dollar going up or down? So along those lines, now, once we've come out of the North American session, let's start looking around to see what's coming out everywhere else, right? This is where, as I've been saying, like the German numbers and the Eurozone numbers have been weak. Start looking around for a lead into the Eurozone numbers, right? See what's the next big release out of the Eurozone? Is it a big release or not? This one here's got like 1-star rating, which is low impacting. You're looking across the board, see what else is coming out for the rest of the week. We've got, not until tomorrow, we've got the GDP numbers out of the UK and a bunch of data there. That's probably all she wrote for the week as far as numbers. until next week. So it's what we're trying to do is piece together where the next move is and where the next best trading opportunity is. Right now, I can see two opportunities which to me look good or worth investing your time in. Euro, okay, it's held that trend line perfectly. It tells me there's a lot of selling up there. We need a big US dollar event to blast it to the top side. Like no one really wants to push the dollar at this point. The other one is dollar CAD. Keep an eye on oil. I would be charting oil and just trading oil, or when oil does break back through that, what looks like resistance, okay, it's actually support because I've got oil inverted for those people who are just joining us new. So you can trade, get on dollar CAD as soon as it breaks, oil breaks through that line, or you can wait for the next resistance line in dollar CAD, which is, 40 or 50 points higher. So there's the things you got to consider. The other pairs, sterling, well, it's just cruising. It's doing its own thing. Vaccine euphoria. Aussie, Kiwi, well, they look a little bit lost up here, especially without the risk on, risk off sentiment. You'd love to see a massive risk off day where US equities are getting hammered down 2%. We'd have good selling opportunities in those pairs. But right now, it's not the time to be sort of jumping around looking for, guessing what's happening. We want to know what's happening and then hit it. All right. So that's where we are, guys. The dollar drifting at this point. Equity markets. Now the data's just all refreshed. Once we go through 5 p.m. New York, all the ranges of the instruments refreshes. So this is the start of a new day. This is why it's the 11th. Once we hit 5 p.m. New York, it goes from the 10th to the 11th. And now we're in the new trade day. So just keep an eye on things as we go forward. You can see the dollar block here. I mean, the commodity currencies, Aussie, Kiwi, and the CAD. Well, you know what? They're not doing a hell of a lot right now. All right, guys, that's my update for today. Hopefully that's insightful. Have any questions, jump on the virtual trading floor and let us know your thoughts. Cheerio.